The perpetual trading landscape is undergoing a dramatic shift. For years, centralized exchanges dominated this segment, with BitMEX pioneering the model back in 2016. But now, a new wave of platforms, both centralized and decentralized, is reshaping the competitive dynamics. The latest data from CoinGecko reveals that perpetual trading platforms saw a staggering $85.3 trillion in trading volume by 2025, showing just how deeply entrenched these models have become. Yet, the playing field is changing. Decentralized protocols are now challenging the dominance of traditional exchanges, drawing in traders with fresh offerings and improved trading metrics. Among the key players, MEXC and BingX have been particularly aggressive in expanding their perpetual contract listings. Between January 2025 and April 2026, MEXC launched 879 new contracts, while BingX added 565. These platforms have focused on listing lesser-known crypto assets, potentially opening up new opportunities for traders who are looking beyond the major tokens. A market expert noted that this strategy could be a sign of a broader trend. Both exchanges are clearly pursuing a bold approach by listing less mainstream tokens. Meanwhile, most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Decentralized exchange, DEX market is gaining traction. Centralized exchanges have seen a decline in trading volumes, dropping from $7.11 trillion per month in 2025 to $4.69 trillion in early 2026. This shift is opening the door for DEXs to attract users who are increasingly wary of centralized models. An analysis of the top 12 perp DEXs shows that their average monthly trading volumes increased from $531.65 billion in 2025 to $611.57 billion in 2026. While the growth isn't linear, it does suggest that decentralized perpetual trading is gaining real momentum. One standout example is Hyperliquid, which reported a trading volume of $190.28 billion. This performance indicates that DEXs are not just surviving in the perpetual trading space, they are thriving. The rise of platforms like April and Hyperliquid signals a broader shift in user preferences. Traders are looking for alternatives that offer transparency, control, and potentially better returns. As DEXs continue to improve their infrastructure and user experience, they may well become a more attractive option for a wider range of traders. However, the market remains uncertain. While the numbers show growth, it's still unclear whether this trend will continue or if centralized exchanges will regain lost ground. The next signal to watch is how these platforms respond to the evolving regulatory landscape and whether they can sustain their current pace of innovation. For now, the perpetual trading segment is in a state of flux, with new players emerging and old ones adapting to stay relevant. The competition is intensifying, and the stakes are high for all participants. The mechanisms driving this shift include the ability of DEXs, too. Most people arrive after the move is obvious and the easy upside is gone. We focus on serious crypto education and high-quality signals before the crowd rushes in, so you can understand the setup earlier and move sooner. If you want that edge, visit the link below now. Offer non-custodial trading, faster settlement times, and access to a broader range of assets. Traders are also drawn to the potential for lower fees and increased liquidity, especially in niche markets. However, the challenge for DEXs lies in maintaining user trust and ensuring robust security measures, particularly as they scale. The next key signal will be whether these platforms can maintain their growth while navigating the complexities of compliance and user adoption. For now, the perpetual trading segment is a battleground of innovation, with no clear winner yet in sight.